Good morning. This is PipslayerFX. Today I'll be talking on gold, Xauusd. So this is the weekly time frame on gold. Remember, gold has been on an uptrend right from day one. Gold has always been what? Appreciating. Gold has always been appreciating right from time. So take note of that. So without wasting much time, if you are new to my channel, kindly like, subscribe. You can as well turn on the notification button so you get notified each time I post a new video. So without wasting much time, let's start. So you see on the weekly time frame, this was a sweep. This is a sweep. The previous week range high was located at this area, and the range low was what? Located at this area. This was the swing high and the swing low for the previous week before this just concluded week. So this was the swing high and the swing low. You can see price taking out the high of the last upper week before closing was lower, indicating for us a bearish reversal. So as you can see, we have a fair value gap at this area. It's a three-dimensional order flow, and it also has a shelf. This is the shelf. The shelf is located at this area. So take note of this. This is the shelf. So gold has to come fill it before what? Reversing. So that's for the weekly time frame. So we have a bearish bias as the overall trend because these are the reasons. Fair value gap coming to close before reversing. So this week has also told us that what the previous range got swept and price closed lower, indicating for what? Reversal. So moving to the daily time frame. Remember, we are using what? Touchdown analysis. So moving to the daily time frame. This is the daily time frame. This is the daily time frame. You can see this was the first breakout, though it's a three-dimensional order flow. You can see three-dimensional order flow. Remember, this was a valid fair value gap because you can see the previous swing high was located at this area, which is the shelf, was located at this area. Three-dimensional order flow giving us a what? Fair value gap, valid fair value gap, and it's reacting to an what? Order block. Now look at the candle that filled the fair value gap. This was the candle that filled the fair value gap. What happened? You can see price didn't retrace back. It closed below the shelf of the fair value gap, automatically making this fair value gap what? Not respected. It's no longer valid. It has been what? Mitigated. So price has already what? Filled this fair value gap, and price closed lower below the shelf. This was the shelf, previous swing high before a fair value gap. So this was the shelf. So price closed below the shelf, indicating for a what? A bearish continuation, bearish reversal. You understand? It's a retracement. So price closed lower below the fair value gap. Take note of that. So giving us a what? Bearish bias. You understand? The next candle retraced back, and what happened? Fell down. Remember, this is an order block. This is an order block. This is an order block. This area is still unmitigated. Now, this is a bearish move currently on gold. So we've gotten that. On the daily time frame, this was the Thursday range, which was here. Swing high and the swing low for Thursday. So let me quickly differentiate this so you get to understand what I'm saying a little bit. So I will quickly mark out the fair value gap area for the what? Weekly range. So this is the fair value gap area for the weekly range. Okay, let's mark it out. That's the fair value gap for the weekly range. So we're expecting price to what? Have a little order here. before retracing upward. Now we've gotten the fair value gap area for weekly time frame. Remember, we are working with the daily now. So let's zoom in. Let's zoom in. As you can see, price failed to what? Take out this swing low of Thursday, giving us a what? A valid range. Now this Thursday range is no longer what? Of use. It's no longer in use. You are making use of the Friday range, which is here, swing high, and the swing low for Friday. So the swing low for Friday. You are not making use of this. So this was the swing low for Friday. You understand me now? This was the swing low for Friday. So moving to the 4-hour time frame, as you can see, remember gold is on a bearish bias. Now this was it. This was it. Now going to the, let's return back to the weekly. Now you understand this. Let's mark out the previous range for weekly. Remember the week before this very week that closed, this was the swing low of that week. This was the previous week before this week that just closed. This was the week. Then remember up here is the what? Swing high. Let me mark it green with green color so we'll be able to differentiate it. The one marked on green is the what? Is the swing low and swing high of the what? Previous week. So let's continue to the 4-hour time frame. Remember, this is the previous week, which is this area. It's not clear. Let me change the color to red. Okay, I think this is a little bit clearer now. Then I think the other one is located at this area. Let me make it red. Yeah, so it's a little bit visible. Now, this was the swing high for the previous week and the swing low. Remember, this was the break. This was the first breakout before continuation. Full candle closed inside. This turtle soup, you can see liquidity sweep. It tried to what? Broke through the previous swing high, the previous weekly swing high, which failed. You can see price got rejected multiple times, telling us that what? This zone is a very strong resistance area, as you can see. Okay, so using our field retracement tool, you can also get that confirmation, marking out the swing high and the swing low. Remember, that was the swing low. Look at the 0.5 Fibonacci area. What happened there? Price broke through the 0.5 field retracement area, tried to what? Retrace up there. Price got rejected, tested the 0.706, but got rejected and closed lower before what? Returning back. So this just like a break and retest. You understand? So price continued selling. You understand? Price continued selling. So the Fibonacci retracement has also given us a clue and what? More confirmation for the bearish reversal on gold. Now it's very simple. It's very simple. Moving to the 1-hour time frame. Remember, using touchdown analysis. Moving to the 1-hour time frame. Now it's very clear on this area. It's very clear on this area that what? Price formed higher lows. Look at the swing low of this area was there, and the swing low of the previous day, which is Friday, was at this area. Though it's slightly what the difference is very little, but it's understandable. You can see. So this is a what? Higher low. This is the higher low. This is the higher low, indicating for what? A little bit of push up. You understand? So this is a higher low, but it's slightly showing because what? The high is not going to be what? Much. So we are hopefully expecting price to react to this order block located at this area. Remember, there is a valid order block at this area. This is a valid order block. This is a valid order block. And price left a what? Fair value gap at this area. So what we want to see is very clear on gold. You want to see, remember, this is my analysis for this new week. So we want to see price pushing upward, reacting to this other block. Remember, it's a valid order block, and probably pushing to the downside to fill the weekly fair value gap before probably retracing fully. You understand? So this is my bias for gold for next week. Remember, forex trading is not 100% guaranteed, but with good analysis, you are good. You understand? So watch out. Be very careful for the week, and you can also turn on the notification button so I post more updates on code for the next week probably. You can also follow me, subscribe to my YouTube channel, like, comments. So see you on next video. Thank you very much.